Good morning, everyone. If you can hear me and can see the screen, kindly type in a hi in the comment section below, please. Yay, fun. Good morning. Hi. Great. Great. Hey, Carrie, good morning. Oh, that's beautiful. That's beautiful. So, great. So that means we are ready to go. Scott Benji, good morning to you. Oh, great. So we're good to go then. Thanks for the compliment. All right now. I would like to welcome you to yet another beautiful session, and it's going to be an exciting one for us as most of our trades yesterday went as expected, and we're going to be looking at the pairs we talked about yesterday as usual, and where we're going to be looking at what has happened and where we need to make adjustments or what plans we need to do going into the New York session. Well, I'm fine, thank you. I'm fine, thank you. So the first thing we want to be looking at right now is the UkOil. And good Lord, the UkOil moved significantly as expected as price continued to find higher highs. And we saw this huge expansion during the course of the last New York session yesterday, which moved price over how many pips that was? Moved price over 300 pips in our profit. So I don't know if anyone took advantage of this UkOil yesterday. Here, Can, good morning. We'll look at that too as well. I think US oil follows after we've deliberated on the UK oil. So please stay tuned. So currently the UK oil is about how many pips in profit now? We have over 400 pips in profit now. Then at this point in time, like I said yesterday, we're still going to be using this bullish trend line as our yardstick going into the New York session. And remember, our take profit target is at $120, and price is currently at $117.5 at this point. So once we want to be doing, first thing we want to be doing is we want to be moving our stop loss into right below the structure at $117. And why are we moving our stop loss into that area? First of all, the reason why I want to move our stop loss is one, we want to lock in some profits so that should any surprise bearish move happens, at least we're not going to be caught unawares. So we want to be moving our stop loss to somewhere around here. And the reason why that is because since we saw that impulse leg yesterday, we saw price do a consolidation phase around here, forming what looks more like a bullish rectangle at this point before we saw that breakout of that structure. So if you allow me to bring out my line chart at this point, we have a resistant level around here. Hold on a second. We have a resistant level around here. And also we have a support level right below this area at this point. So one thing we observed is that we had a breakout of that structure during the early hours of today. We saw a breakout of that structure around this area, giving us a sign that there is a bullish momentum still coming on this one. So what we want to be doing right now is to be moving our stop loss right below the structure around here. Let's say 116.9 or 116.5, depending on your preference. But I will suggest that let us just keep our stop loss right below that structure as we could be seeing price come back into somewhere around here before we see the trend continuation to the upside. And on the contrary, there is a possibility that price might break down of that structure and do a retest, then probably come down to retest that bullish trend line or probably the previous structure, after which we look for structures that support a trend continuation to the upside. So this is what we are going to be looking forward to going into the New York session. We already have a bearish candle running right now on the 1 hour time frame, and it's going to take around 43 minutes for this candle to be exhausted. So we don't know how far this candle is going to go, but there is a possibility that we could have a breakdown where price come and do a retest into the bullish trend line we identified earlier, or probably into the structure, after which we see that trend continuation to the upside. So that is one phase, and the other one is price could probably do a retest into somewhere around here before we see a trend continuation to the upside. And if that happens, that is, if price comes back into this area and breaks above one more time, we want to look for a retest on a lower time frame, let's say the 5 minutes, 10 minutes time frame, to look for an opportunity to add one position to this. So our take profit target still remain at $120 on the UkOil. So I don't know if you have any questions whatsoever at this point. Okay, in the absence of none, let's move forward. Then we move on to the US oil. The same scenario we have here on the US oil, as price moved as expected. Remember I said yesterday that we should just allow that stop loss to play out if price comes back to stop loss, but fortunately for us that didn't happen, as we saw price move about 350, 330 pips move in our direction since yesterday. And right now it's very appropriate that we move our stop loss to respect previous structure at this point. And if we look left, what are we going to be seeing on this one? So allow me to delete all these ones as we no longer need them anymore, so that we can have a very clean chart for the sake of clarity. So right now we are having to use this this buy opportunity. We don't need this anymore, and so this is what we have in here at this point. And let's look left to look for structures that we can use as our stop loss target. Okay, we can have $113 as our stop loss target at this point, after which we look forward to a possible retest of that bearish trend line around here, or probably the key level at $111.50, where we'll be looking for structures that support a trend continuation to the upside. So our take profit target still remain at 122. Is it 122? Okay, 122. Let's put it at 120. Let's do a round figure at this point. So let's keep it at 120 at this point. So we still have a possibility where price will come back down to do a retest of the key level at $111.50, or probably come back down to this bearish trend line, this red bearish trend line, where we look for a reversal pattern that supports a trend continuation to the upside. So now that we have this impulse leg at this area, we can see that we are within a structure right now, a consolidation phase at this point that looks more like a bullish rectangle, just like the one we saw on the UkOil. So if you allow me, let's also identify that structure very clearly. We can see that the structure is around this area, and then we have another one right above, sorry, excuse me, we have one right above here as well. So we have something to play around with going into the New York session, and this is so with our stop loss right at $113, and that's about how many pips? That's that's like 240 pips at $113. So what we are going to be looking forward to, like I said, is probably price comes back down into this area where we look for structures that support a trend continuation to the upside. And if you are a counter trend trader, then you might want to be looking forward to probably price do a breakdown of that structure, then price do a retest, that after which we look for confirmations that support a trend continuation to the downside. So we want, if you are a counter trend trader, you want to be taking an entry right below the structure. That is, please listen carefully, that is, if price breaks down the structure, price comes back up into this structure, then we look for structures, probably rejections, 1 to 3 pattern, whatever reversal pattern that is, then we can actually join the decline to the downside. So if we have an entry right below structure here, that is, if we are doing a counter trend opportunity to scoop the retracement move, then we want to be aiming at the neckline around here as our take profit target. That's $111.50, and that's around I think, how many pips is that? That's around 200 pips, and with your stop loss right above that structure around here. So with around 45 pips stop loss around here. So on the other side, if price does not do as said, that is, price does not do that retracement to this downside, then if we definitely see a breakout of the structure, and that is price closes above, you can see since yesterday we haven't had a breakout of structure. That is, we don't have a candle that have closed above that structure, as we continue to see rejections of that area. But right now, what I'm saying here is this: if we see price break out of the structure, that is, we have a close above that structure, and then we have a retest into the structure, then we could take advantage of that potential bullish move if we see structures like supporting a trend continuation to the upside, and with a take profit target still remaining at $120. So for those who took advantage of that bullish move, kudos to you. Another opportunity is lined up for us. If price breaks and close above this area, then we see a retest of structure, then we look for patterns that supports a trend continuation to the upside. So that is that for this scenario. Let me come again on the counter trend trade. On the counter trend trade, we am saying that if we have a breakdown of structure, that we have a bearish engulfing candle, we see a retest into structure, then we can look for patterns that support a trend continuation to the downside, after which we can take our entry right up below structure at $113.60 for the counter trend move. Okay, Raf is asking what stop loss we can put here. You mean for the bullish move? If it's for the bullish move, I have said that let's put our stop loss at $113 here. That is this rectangle, this yellow rectangle here. $113 is where I'm suggesting we put our stop loss on this one. So like I was saying earlier, if we see price do a breakdown of structure, price comes back into structure, then we look for patterns that support a trend continuation to hop into the potential decline to $111.50. It's very, very likely that price comes back down into that trend line, after which we see a trend continuation to the upside. But for the meantime, I would suggest, since it's just Friday and we're almost closing for the week, you could probably hold on to your 200 pips on this one if price does that bearish move. However, if we see a breakout structure that is to the upside, we see candle close right above that structure. Please listen attentively, please. We are not only looking for a breakout of structure, we are looking for a close above that structure. Then we see price come down into structure. We can actually look at a lower time frame for this, probably 10 minutes or 15 minutes time frame, whatever that suits you, and we look for structures that support a trend continuation. Then now we can add a position to our existing bullish potential to the upside, with our take profit target still remaining at $120. I don't know if I answered your question, Ralph. Please affirm positive or negative to know if I actually answered your question appropriately. Thank you. So, is there any other question on US oil? Any questions on US oil? I'm going to take my time. I think there is a lag in the production. So I would like to, okay, great. You're welcome, Raf. Great. So let's move on, please. So moving on to, we talked about USDJPY yesterday, and on USDJPY, we were expecting that price will do a retest of this area, after which we look for structures that support a trend continuation to the downside on the USDJPY. Sorry. I'm sorry about that. So back on the screen, remember we had this move on Monday, I guess. We made around 120 pips earlier on this week on this USDJPY, after which we were looking for a breakdown of this temporary bullish trend line, which finally happened during the course of yesterday's trading session. We saw price move down about how many pips is that? Let's confirm what that is. Moved down around 90 pips before price move back to this area, though it didn't get to our entry point. It just got back to this area before price moved back down one more time again. And right now price is back into the neckline we identified yesterday as an area where we could take advantage of another downtrend continuation. However, looking closely into the structure presently on the chart, that is on our 1 hour time frame, I've continued to see that we had multiple rejection of this area at 126 or 127 area. Is it 126.7 area? And making this area somewhat looking like a demand zone that has been holding price supported since the last 72 hours thereabout. So if you allow me, we label this a temporary demand zone, because I'm not yet sure if this demand zone is going to hold today. So let's label this the temporary demand zone. Let's put it right inside, and then we have a temporary, oh sorry, that was not clear enough. Temporary demand zone. So we have a temporary demand zone within this area. So for the sake of a clean chart, let me delete this. We no longer need all this. We no longer need all this. We no longer need this, so that we can have a clean chart to work with at this point. So this is what we're having right now. So now price has been old 126.6 area has been holding price action in the last 72 hours, giving us a clue that buyers are actually having a say right now at this point. So one thing I'm looking out forward to at this point is there is a possibility that we could be having a reversal evolving right behind the scenes, and we don't want ourselves to be caught unawares, as before any spike happens, the market normally gives us a clue into what is being expected in the future, and this cannot be ignored, considering the multiple rejection of 126.6 area in the last 72 hours, which is probably giving me a sign that we might be having a breakout of this trend line that was identified earlier on, where we look for a retest of structure to join a potential uptrend continuation at this point. Well, if you are still in this trade, I would suggest you move your stop loss to somewhere very comfortable in such a way that if that bullish move happens, we are not taken into a loss position on this one. So let us move our stop loss right below that key level that we identified at 127.6 earlier on the week, and then or probably move it right below that bearish trend line to be on the safer side. However, if price continued to move downside and the demand zone was finally broken, then definitely if we see a breakdown of that demand zone and we see a retest, we want to add one more position to that trade to with our take profit target still remains at 125.8 area, where we will be calling it a day for this USDJPY. Remember, we are still on a bearish moment. We've been on a bearish momentum for a very long time, and it's very likely that the bearish move continues. However, if there is a possibility that we see a breakout of structure during the course of the New York session and we see a retest, then we might be looking forward to a bullish momentum going forward. So this is what my perspective is on the USDJPY. So the first advice I'm giving here on the USDJPY is to definitely move your stop loss to break even or probably below that key level or trend line to hold in your position as price action is being monitored. So I think I'm clear on this one. I don't know if there are questions. The more, you're welcome. You're welcome. So I don't know if there are questions, clarifications needed. Hello, you said, is there any clarification needed on this one? So I should move on, right? Okay. So moving on, we're going to be looking at CHFJPY, which is one of the pairs we talked about yesterday. And let me zoom into what we have here on the 1 hour time frame. So we are profitable on this one already. Price has been moving as expected. We were here yesterday. We were right below this area yesterday where I said we should put a pending order right at 132.08, 132.1 area, and prices moved in our direction and is running at around 50 pips, 45 pips thereabout at this point in time. So like I said yesterday, we have structures that has been guiding our action going into yesterday's New York session. The first structure that was guiding our action was the new demand zone, which I actually depicted with a question mark because we were not sure if that demand zone is going to hold for yesterday. But fortunately for us, it's held, and we can see that prices also, that demand zone also shares a confluence with that bullish trend line that we have here, that bullish trend line. So if you allow me to extend this trend line, because it's going to still be, sorry, let me just use the right to extend it so that we don't have any mix up. Yes. So we have this scenario here right now. You can see the bullish trend line has been holding for some time now. And we also have this one too. This is a temporarily bullish trend line, though it was broken sometime during the course of the Asian session yesterday. We saw it broke down that trend line, but we saw sharp rejections. We saw structure supporting a trend continuation to the upside from this area. So what I'll be suggesting at this point is this: move your stop loss right to 132.2 area, at least to guide our position in such a way that we don't fall into a loss position on this one. So we don't really want to lose what we have already gained earlier. So this is what we have here on the USD, on the CHFJPY. So if we look closely into the structure, bring out our line chart, please. So if we look close into the structure, we have a resistance level around here that we can also use as our guide going into the New York session. So if you allow me, let us have this red. to indicate a supply area. We have a supply zone around this area. So one thing we want to be watching out for at this point is that if we see a breakout of that structure and a retest, you see, one thing about this retest I've been mentioning is this. Since we are looking at charts on the 1 hour time frame, it's most advisable that if we are looking for retest and reversal patterns, we should go down to a more lower time frame to identify this structure, because it's very um, you can easily identify this structure quicker on a much lower time frame. Let's say the 15 minutes, the 5 minutes, the 10 minutes time frame, so that you can catch that move when it finally um, unfolds. So we look for a retest of the structure around this area, then we look for patterns that support it in continuation. And then you can now add one more position to this trade, with our take profit target still remaining at 133.3 area going into the New York session. And remember, even if it's break even on this one, remember we already took profit on this one on Tuesday. We had a profit of around 100 pips on CHFJPY on Tuesday. This is just another position we are trying to ride on with the trend on this one. So let's look at how price action plays out in the next couple of hours, and I'm sure we're not going to fall into any loss on this one, because definitely you must have moved your stop loss to a very comfortable area to lock in your position in the positive side. So that is that on CHFJPY. So we'll move on to EURCHF. On the EURCHF, what we're looking at is on the loss. Loss. Yes, exactly. Price is currently running in loss for us on the CHFJPY, as we see price breaking back down into that structure. However, it is pertinent here that we actually saw the breakout of that trend line. We saw the breakout of that trend line, and we were waiting for price to do a retest of either the key level trend line before we join the potentials to the upside. However, price has gone below that bearish trend line at this point, now giving us a ambiguous situation where it will be very um, dicey to make a decision on this one. So for me personally, what I'll be saying on this one is just let us put this EURCHF on pause and let us see what happens when we move into the New York session to now determine how to respond to the structure in the market at this point. So for EURCHF, let's just put this one on pause and see what happens during the New York session. And if we see structure that supports a bullish momentum, then we can ride on our take profit target around 1.0410. But our advice, since I'm not going to be around with you during the New York session, so I'll just suggest you just put on a pause on this one, and let's see some other pairs we can take advantage of a clear opportunity. So moving on to GBP New Zealand. GBP New Zealand is very profitable for us this week. As we can see, price has been moving in our favor since the beginning of the week, though we've had a very long consolidation phase where participants are caught within an indecision phase. However, we have yesterday I made mention of the fact that we could take advantage of another selling opportunity at a breakdown of that key level around this area, which we've already experienced, and we saw if you go down to a much lower time frame, we saw rejection of that area to take advantage of that move. So we see the first pattern that gave us the clue going into this week was this reversal pattern around this area, where we were looking for a breakdown of that neckline, that is the breakdown of the structure, and we saw a retest to join the decline to the downside. So personally, I have like almost 2 or 3 positions running on this one, and we have the first entry here on Monday, which we took, and then the second one here today, later on today, and we want to be using this bearish trend line as our guide going into the New York session. So one thing I want us to be looking out for, if price comes back into that bearish trend line, which also shares a confluence with a key structure identified 1.939 area, then we look for patterns that support a trend continuation to the downside. Then we can actually join and add one more position to this. So this is my expectation on the GBP New Zealand. For those of you who took advantage of this trade, kudos to you, and ensure you move your stop loss accordingly to make sure that we don't get caught in the negative side on this one. So now moving on to XAUUSD. On XAUUSD, we've really had quite a very complicated situation here on the XAUUSD. Like I said yesterday, we were expecting price to come down into probably this buy opportunity zone area to reject this, to retest this trend line, or price come down into the key level at $1,835. But it appears price is not doing that at the moment, as we continue to see price finding higher highs. However, during the course of yesterday, we noticed price has been rejecting this level at $1,845. As you can see, price came down into this level, rejected it one time, then we saw multiple rejection of this level, giving us a sign that the bullish momentum that we've been expecting in the last 1 week is finally coming to stay. However, we still need more further confirmation at this point, as we need a breakout of structure, which happened now, and then we want to look for a retest into structure and look for patterns that support a trend continuation to the upside. So with this setup identified here on the 1 hour time frame, what I want us to be looking out for, allow me to delete all this. So we also have a clear. So since we're no longer having that selling opportunity, that is, we were expecting price to come down into this area, but that appears not to be happening, as we saw this $1,845 area holding price supported, giving us something that looks more like a reversal pattern, that is a double bottom structure, sending price above that neckline. So with 1,851 as our new key level area, which is around here, going into the New York session, we've already seen a breakout of that structure at this point. We saw a breakout of that structure. So my advice at this point is that we should look for price coming back into structure. That is the neckline of that reversal pattern, where we'll be looking forward to patterns that support a trend continuation to the upside. And if you look closely into what has been happening lately, we can see that this new evolving bullish trend line shares a confluence with that key level. So this is something we want to look closely into going into the New York session. So my advice at this point is that we should wait for a retest of structure like this, price come back into the neckline or the key level we have identified here, then we look for patterns that support a trend continuation to the upside. So if that is the case at this point, so where will our take profit target be? Remember, we've already identified our take profit target during the beginning of the week, and the top profit target is right between $1,900 and $1,950. So anywhere within that area is most comfortable to take our profit when we finally join that buy opportunity. Remember, the reversal pattern here identified earlier in the week is still holding price action right above demand zone. As we saw, if you allow me to give you a visual representation of what I'm talking about, we saw this reversal pattern, we saw a breakout of that structure, we saw a retest, and price went back up. Then we find a higher low right here, which also shares a confluence with that bullish trend line. Then we saw a breakout of that neckline at this point. Then we want to see price come to a retest, could be a sharp one, and then we want to join price going to the upside at the site of a setup that supports a trend continuation to the upside. So we want to be having our entry point around this area with our take profit target right within where we've identified earlier. So this is what my expectations are on the XAUUSD, on the gold. So we have our stop loss right below this key level. So if you want to join right now, it's okay, as long as we can see that price is still above that key level. So if you are not patient enough, like I said, we're expecting price to come below this level, to drop down before we join the rally. You can as well set a pending order right at this area, where we'll be looking for price to strike through that area, moving into the New York session. So, but mind you, the key level right here at $1,851 shall be, we don't want to see price go below that level. We don't want to see price go below this level. If price goes below this level, definitely we should change our bias from that bullish momentum to probably a sell momentum at this point. So this is my expectation here on the XAU USD. So I don't know if there are questions, clarification needed, or probably an observation. Evelyn, hi. Rock Mushroom, hi. I don't understand. It would be nice if there was a translation. Well, yeah, I'm short for words on that. Sincerely, I'm short for words on that. So, in the absence of no questions, let's move on to our next pair. So, we want to be looking at GBPJPY. That's pounds JPY. Right now, if you are taking advantage of this bullish move, please and please move your stop loss to break even right now. Because the way structures is unfolding before our eyes, we continue to see multiple rejection where price appears to be respecting this trend line at this point, giving us a clue into a bearish momentum on the GBPJPY. So if you are in this trade, please move your stop loss to break even at this point, because we could be taken out at any point in time on this one. So on the GBPJPY, personally, I would just say that we should hold on and let us see how price plays out going into the New York session, as the momentum I'm seeing here appears to be supporting the sellers at this point. So it's likely that price might break down this bullish trend line, after which you see a rejection of that trend line that also shares a confluence with the bearish trend line, and then we could be looking for patterns that support the trend continuation to the downside. So that is that on this GBPJPY. So if we are going to be doing anything on this one right now, I will suggest that, despite the fact that we are on a very strong demand zone, I would suggest that we just keep our fingers crossed going into the New York session in terms of any bullish momentum right now, as the thing that will make us do a bullish momentum on the GBPJPY is if we see a breakout of that trend line, that is a significant breakout of that trend line, then we see a retest into the trend line, then we could take advantage of patterns that support a trend continuation to the upside. So that is the first perspective. And the second perspective to this one, which looks more visible right now, considering how price has been respecting this trend line since the beginning of the week. You can see price has been rejecting this trend line, and we can see that the bullish move has been, the expansion has been reducing ever since the beginning of the week. So one thing I want to be looking forward to is we already see multiple rejection of this trend line around this area. You can see since the beginning of today's trading session, we've been seeing multiple rejection of that area. So what I want to be looking forward for confirmation at this point is a breakdown of this bullish trend line, after which we look for a retest of this trend line, and which also shares a confluence with that key level we have there on 160 level. then we look for structures or patterns that supports a trend continuation to the downside. So what we want to be doing at this point after confirmation happens is that we want to be having our entry right below 160 area with stop loss right above that key level around, let's say, 60 pips. Then we take profit target on this bearish trend line here, which also falls within that demand zone we identified earlier. So we can have 157 area as our take profit target. If you allow me to put that on, okay, we have 157, that's around 270 pips with a stop loss of around 60 pips or 70 pips thereabout. We can hold on to a bearish momentum on this one. So what will be guiding our action going into the New York session are three parameters here. One is the bearish trend line. That's the red dotted line that we've seen here. That's number one. Then this bullish trend line we saw here, we want to be looking forward to a breakdown of that trend line, a retest of that trend line to join a rally to the downside. And then the third one, and the most important one, is the key level right there at 160. Allow me to label this area. Okay, it's already labeled. Let's put it on the right hand side for clarity's sake. So we have it right here at so a key level at 160 area, also a very important parameter to guide our actions going into the New York session. So we really don't have anything confusing here. We already have parameters that will guide our actions going into the New York session. So I don't know if you have any question. Well, somebody is asking me if I take into consideration what happens on the calendar. Well, what my consideration here is basically technical, and the reason why I have adopted technical approach to trading, I've understood that on the chart, what we see on the chart is a psychological transition of what is happening within the participants in the market, and whatever is going to happen during the event is already unfolding on the chart. So if you can read your chart very well and look at the candles very well, you can actually tell what's going to happen after the news release or the news event. So whatever happens on the chart will determine what will happen in the news release. So if you could get your act right on the chart, the news event will only help to propel price to move quickly in whatever direction you have proposed. So simply to answer your question, I only consider technical analysis, that is studying of price action, studying of price movement to determine what happens next. I think I've answered your question, please. So any other question? Okay, all right. Okay, so that's that on GBPJPY. So if we move on to AUDCAD, we've really have been struggling on AUDCAD since yesterday. Price moved in our favor during the course of the New York session yesterday, and it moved about 40 pips before we saw price came back to break even. So if you were on this one earlier, definitely you want to we were taken out at break even level, so we were neither positive, we were neither profitable or in loss on this one. So going into the New York session today, the key level right here at 0.9090 is still going to be our yardstick going into the New York session. And with that being said, I want to adjust our entry point to right below that key level. So I want to be looking forward to a selling opportunity right below that key level here. So what we're going to be having at this point is this: we're going to be having our entry point right at 0.90844. So if I were you, I'll be putting a pending order right now, as we already have something that looks like a reversal pattern. Remember, we identified a double top structure around this area yesterday, and price came back up after breaking the neckline of that reversal pattern and came back up into the structure, rejected the structure twice, came back down, came back into that structure again, and we are seeing multiple rejection of that area at this point. So we want to be looking forward to a breakdown of the neckline, which is also the key level at 0.909. Then we see a retest to join the decline to the downside. So right now, if you put your pen in order right at this area, we could be looking forward to a breakdown, and then if we see a retest, then after formation of patterns that supports a trend continuation to the downside, we can add one more position to this trade. So with a take profit target at around 0.89900, that's around 95 pips in profit, we should have our stop loss right below, right above structure, and that's around 35 pips thereabouts approximately. We'll be looking forward to this going into the New York session. So this is what we shall be looking out for. All right, you are welcome. So this is what we're going to be looking out for going into the New York session. And mind you, remember that we are still prices oscillating around that bearish trend line we identified on the, is it weekly or daily time frame? Let's look at it together. We identified that bearish trend line on the, let me see what happened. Let me see the daily time frame first. Okay, it's on the daily time frame. We identified that bearish trend line here. You can see it here. We can see it. So we have a confluence around that area. Price has moved back into the trend line. We saw the first rejection. Then price came back now. We saw that bullish move. So I'm expecting that price will probably break down and move further down a little bit from that area. So if that does not happen, then probably next week we could be planning a bullish momentum. So whatever happens during the New York session today will determine how well we will continue approaching this trade. So coming again to our 1 hour time frame, I'm looking forward to a breakdown of this neckline, a retest, then price going to the downside. So we have around 95 pips, 95 pips potential take profit on this one. Now, another thing I added during the course of yesterday is this, that if price breaks down this neckline, this bearish trend line, the red line on your screen right now, and we see a retest of that trend line, and we see structures that support a trend continuation, we should definitely add one more position to this, to our existing trade here on the chart. So that is that on the AUDCAD. So we're moving on to AUDUSD. On AUDUSD, price did not move as expected as we continue to find higher highs at this point. However, it is pertinent to say here that we're still within a very strong supply zone, and for the AUDUSD, I will just let's hold on here and let's see how price plays out during today, and then by Monday when market opens for the new week, we can actually make a big decision on this one if we might be going bullish, as we already see that price has broken out of that major bearish trend line we identified on the daily time frame. So on the AUDUSD, please let's just hold on this one and let's see how price plays out during the New York session to determine what we're going to do coming in the coming week. So on the EURUSD, yesterday I said that we are waiting for price to come down into a level. Oh, price already coming down already. So we said we are waiting for price to come down into the key level. Let's go to the 4 hours time frame, please. Okay, we have something like this here. So right now we have we're expecting price to come down into this bullish trend line, or probably this key level, after which we look for structure that supports a trend continuation to the upside. So on the EURUSD, our patience is still required. We have a key level sitting right at 1.06, is it 1.06200, we have a key level sitting around that area, and we have a bullish trend line that will guide our action going into the new week. I'm not sure if this is going to happen during the New York session that is set up that will support a trend continuation to the upside. I'm not sure if that's going to happen, but let us see if we could take advantage of that bearish momentum that we are seeing on the chart right now. I think we have around like 90-80 pips to catch. Let's see on the 15 minutes time what we can do on that one. So going to the 15 minutes time, oh, price has really gone that far. Has really gone that far. So if we miss that, definitely, okay, I think we have something around to play around with going into the New York session. So if we look closely, we can see that we have a bullish trend line around this area. We have a bullish trend line around this area. And hold on a second, please. We have so if you allow me to go back to the 45 minutes, okay, we have something like this now. Bringing out our line chart, I want to look for a resistant level that we could use, a key level we could use as our guide going into the New York session. So if we look left, we can see that we have areas that have been resistant, support, price broke down, this became a resistance, then we have the support level and that area. So what does this imply? It implies that this is a very strong key level that we can actually use going into the New York session. So this level around this area shall be our guide going into the New York session. So that's around $1.07. So with a key level at $1.07, we have something to play around with going into the New York session. So there is a possibility that price will there will be a false buy here. Probably price will come up a little bit from here, then, and if we look, we can see that this is a supply zone around this area. Price has been rejecting this area since in the last 3 days. Hold on a second, please. Price has been rejecting this area since in the last 3 days. So we have a sell, we have a supply zone around here. We have a supply zone within that area. Allow me to place this right. So we have a supply zone around here. So right now, what the scenario we are having right now is this. We have a key level at 1.0700. The possibility of price doing a buy, there could be a false buy from this area, after which if price comes into the supply zone, then we look for structures that supports a reversal pattern. You can look for a reversal pattern in the form of an inverse head and shoulder, 1, 2, 3 reversal pattern, or double top structure, where you can take advantage of the breakdown of structure to join the decline to the downside. However, if that does not happen and we see a breakdown of this key level, which also shares a confluence with that bearish trend line, with that bullish trend line, then a retest of that trend line and structures with patterns that support a trend continuation to the downside can actually be an area where we could take advantage of that bearish move that we've been expecting. So what we are going to be looking forward to, if you are going to do that, is to either sell right below this key level. That is, if we have that breakdown and retest of that structure, we can sell right below that key level, or sell right above below that supply zone if price goes back into the supply zone. So what are we going to be having as our take profit target? So we have two scenarios here. We have a possibility from this area. So we have, if a possibility happens from this area, then we have our stop loss right above structure with around 35 pips. Then if price actually does not go that far and probably comes from this area, then we have our stop loss right around this area at around 35 pips also, with a take profit target of around 127 and this one 170 pips thereabout. So let's go to the 2 hours time frame to have a better look at what I'm talking about. So remember, I said on the higher time frame that we are waiting for price to come back down into the ski level or this area where we are going to be looking for an opportunity to join the big move to the upside if it finally happens. However, while we wait, for those who love counter trends, then there is a possibility I created around here where if we see price go into the supply zone here, then we see patterns that support a trend continuation, then we can actually take advantage of that move to the downside. However, if price does not go that far and price continue to the downside, we have a breakdown of key level, we have a retest of key level, then we could actually join a decline at this area here at 1.06930 to join the decline to the downside. So this is my perspective on Euro USD, and I hope I really made more sense today to you as we look forward to the New York session. So thank you very much. So I don't know if we have any questions. Okay, so let me quickly do a quick recap of what we talked about so far. So back to the UkOil, we talked about the UkOil, and we said the first thing we said on UK was to move our stop loss to where I think 113, I guess. On the UkOil, I said we should move our stop loss to I think 116, I guess. Yes, 116. I said we should move our stop loss to 116. Let me identify that quickly. So 116. I think 116.5. So we have this as our stop loss right there on the UkOil, and we're expecting that price will continue to the upside. And I made mention that if we see price break above the structure, that we see price close above that area, a retest into structure, we can actually add one more position to our existing bullish buyers. However, if we have a breakdown of that structure around here, a retest into structure, we could be looking for reversal patterns to join a decline to the neckline here, or probably the bullish trend line where we look for structure that will push price further up. So that's that on the UkOil. Then we went Scott Benji, you said you don't have an opportunity to be able to tackle UkOil. Did you take advantage of the trade yesterday? Please kindly clarify if you took advantage of the trade yesterday. Did you take advantage of this bullish move yesterday? You did. Really? Why? I think my explanation on the UkOil was very, very clear yesterday, where I explained that a break above of that neckline, of that key level at 115 was a very, very good area for us to take a buy opportunity. And I did ask if there was any problem or any clarification needed, but there was no mention in that. Oh, I see, I see. Now I understand what you mean. So that is that on the UkOil. That's that on the UkOil. So moving on, we moved on to USOil, and then on the USOil we shared a scenario here also, where the first thing I said on the USOil was to move our stop loss to $113, after which we identified a structure that is a consolidation phase between 113.70 and 114.50 area that has been a consolidation phase since yesterday. And what I said that on this pair is that if we see a breakdown, a retest of structure, then we could be looking for opportunity to enter the sell position on this one with a target at 111.50 cents. Now, with a stop loss right above this area. However, I also stated that if we see a breakout of structure, that is a close above candle of the structure, a quick retest of this area, and to get that you can go to your 15 minutes 10 minutes time frame to catch that move. Then we see, look for patterns that support a trend continuation to the upside. So for our buy buyers, we still have $120 as our take profit target, and for the sell buyers we have 111.50 as our take profit target. So that is that on the US oil. So we talked about USDJPY also, where we said price is moving as expected on the USDJPY, and advised that we move our stop loss to somewhere right above that bearish trend line or right below the key level. And because the reason why I said that is because of the temporary demand zone we identified around 126.500 area, which has been holding price supported in the last 3 days. And because of that, we just need to lock in some profits. Despite the fact that we made some 120 pips earlier on in the week, we can still lock in some profit at this point as we expect price to continue to move in our favor. Our take profit target still remain at 125.8 area, with the stop loss right at 127.825 thereabout. We look forward to price breaking down that demand zone at this point. And I also said that if we have a breakdown of demand zone and a retest of this area, and we see patterns that support a trend continuation to the downside, we could add one more position to this trade with the take profit target still remaining at 125.8. So that's that on the USDJPY. And then we moved on to EURCHF. I guess, is this okay? CHFJPY. On CHFJPY we're in profit, and the first thing I said was we should move our stop loss to break even as we continue to see multiple rejection of 132.640 area, which is giving us a sign that probably sellers are actually hopping into the market, moving into the weekend, and this might push price further down. So move your stop loss to break even at this point, and we hope price continue to move in our direction. And if we see a breakout of structure, then a retest of structure should welcome us to add another position to this trade. Our take profit targets to remain at $133.300. Now moving on to EURCHF, I said on EURCHF we should just hold on this one and then see how price reacts. However, if we have a retest of this neckline area, then we want to join the selling position to the downside. So we have our take profit target for the selling position at 1.019, which is around 100 pips thereabouts. We have our stop loss right around 25 pips. Then so that's that on the EURCHF. No more buying opportunity on EURCHF considering this bearish trend line. So we use this bearish trend line and a key level as our guide going into the New York session. So GBP New Zealand, like I said, still moving in our favor. You have moved your stop loss accordingly, and our take profit target still remain at 1.91700 on the GBP New Zealand. Then moving on to XAUUSD gold. I said gold, you can either set your pending order right at $1,859.520, or wait for price to come into this neckline where we look for structures that support a trend continuation to the upside. So we have our take profit targets right around this area. So personally, I'm putting out $1,910. So we want to see structures, we want to see bullish momentum on the XAUUSD from this moment on. So now we moved on to GBPJPY, where we started seeing bearish momentum on the GBPJPY, and price has continued to respect that red dotted line. So what I said here is this: going into the New York session, we have 3 parameters that will guide our actions going into the New York session. The first one is the bearish trend line, that bearish dotted trend line. Then the second one is the bullish green line, and the third one is the key level. So what this simply means is that we want to be seeing price right below all these parameters to join the decline to the downside. So what we want to be doing at this point is first of all seeing a breakdown of the skill of this bullish trend line, a retest, then we join the decline to the downside. And if you like, you can actually do a pending order right away at this point and then join the decline to the downside if it finally happens. Then on the AUD card, like I said we are still struggling on the AUD card. We were taken out at break even yesterday, and I still remain bearish on this one. And we have a pending order right below key level after